Hey everybody, I hope everyone is doing well and had a good day today. Thank you for joining me for today's end of day review of the Emini 5-minute chart for Friday, February 6th, 2026. I think talking about the context on the higher time frame is relevant going into the day. I think it's always relevant. I just want to keep these reviews shorter, so I don't want to do a complete top-down analysis every time. But you can see the context. Here's yesterday's close. This is the daily RTH chart. 3-bar micro channel, bars getting smaller, leg 3, testing support, and overall trading range. So what's the expectation here? What's likely to occur going into the day? What kind of day can we expect? Well, 3-bar micro channel, and based on the bar to the left, the theoretical risk for the bears is really big. In theory, bears put their stop here. If you're selling the close, 1x your risk is all the way down here. It's not that it's impossible for the market to get down here. There's a magnet to be tested. This could be the bottom of the trading range. This could be a reversal down from the top of the range, but the problem is the structure through here is that there is a bear channel line. It might be an expanding triangle, but it doesn't really matter what you call it. All that's relevant right here is the channel line, the bear channel line. We test it, we found buyers. We test it again, market rallies. We test it again, and the expectation is that there's probably going to be buyers here. The trader's equation, not great for the bears. You know, it's probably not 60% that we get a measured move down because we're testing support in leg 3 in a trading range. And if that's the case, if the bears know that selling here is not a very good trade, how can they improve their trader's equation? One thing they can do is not sell, and they can look to sell higher. They can sell value. In a trading range, that's what traders want to do. They want to buy low and sell high. So if we are low in the range, then traders are not going to be selling. They're going to be buying. So bears not really eager to sell a late leg at support here. So we probably have to go higher to find sellers. And if that's the case, then all that's left for there to be here are traders who are buying. Today opened with a fairly big gap up and a big follow-through bar on the open on bar 1. This horizontal blue line is the prior day's high. In general, you can expect resistance sellers at the prior day's high. But look what happened here on the open. Big gap up, big follow-through bar, and then a couple more follow-through bars for the bulls. So far, this is a strong bull breakout. Even on the lower time frame, we talked about this yesterday. 3 legs down, possible wedge, bull flag, or wedge double bottom. Maybe it's a major trend reversal. Bear trend, trend line break, 2 or 3-legged retest of the bear trend's extreme, and then a major bull breakout. The breakout is probably at least from the start of the gap, yesterday's close, to the close of bar 1. So it's possible we get a measured move up based on the height of that breakout, which takes us up here. And then pay attention to the market's behavior at yesterday's high. Did we find sellers instantly? Well, there was some hesitation, but for the most part, the market broke out above yesterday's high, tested it on bar 3, broke out, and had follow-through buying. The bare minimum, but still follow-through for the bulls, breakout, and then another bar sideways. The absence of a bear body. So, strong enough rally on the open, second leg up, likely. Any reversal is probably going to be minor. So That means traders can buy for any reason, use a wide stop, and they can scale in if the market goes against their position with a high probability that will test the highs before going much lower. Bear reversal bar 5, but again, probably a minor reversal. Is bar 5 going to reverse the bull breakout? Probably not. It's one of those trades that beginners might be attracted to taking because, and this, I'm saying that because this is what Al talks about in the video course. He says beginners will be drawn to taking trades like bar 5 because the signal bar looks strong. It's a bear reversal bar closing on its low, and it's an attractive setup because the risk is relatively small and the potential reward is huge. You know, like I said before, most of the time, bar 1 does not remain the low or the high of the day. So in general, the probabilities favor a test of the bar 1 low and a breakout below it. So a bear might look at this setup and say, wow, look at the great risk reward profile, put my stop above the bar. I can make 3 or 4 times my risk if I sell below bar 5. But what they are neglecting to recognize, or what they are too ignorant to remember, is that the trader's equation is made of risk, reward, and probability. So if you have a fantastic risk-reward ratio, if you have small risk and big reward, then you know you must have low probability. The probability that the trade will be successful is low, maybe 30 or 40%, maybe even lower than that, depending on the context. It might even be something like 20%. And another simple way to think about that, and again, Al goes into more detail on this topic in the video course, but he compares taking trades like this with buying lottery tickets, scratch tickets. If you can buy a lottery ticket for $5 and there's the potential that you make $1 million, then you have fantastic risk to reward. Your risk to reward ratio is phenomenal. $5 risk and possible $1 million reward. But how often do you win those kind of lottery tickets? Obviously the answer is not very often, because in order for someone to take the opposite side of the trade, if you have great risk reward, then the person giving you that trade must have high probability. They win small, but they win often. And the opposite, if you take this trade, you lose small, but you lose often. And that's another problem that, again, Al gets into in the video course with dying from 1,000 paper cuts. You might justify taking this trade because the risk reward is great. The risk is small, so if you lose, if you short below this bar, stop above the bar, you know, maybe this time it'll work and you'll make 5 times your risk. But even if it doesn't work, you know you're only losing a small amount. But if you take those kinds of trades day after day, then the losses can really add up. So minor reversal more likely here, probably buyers below scaling in. Reversal and follow through 5 and 6, it's still minor, but it's strong enough for a small second leg sideways to down. So still always in long, but the bears have a signal for a scalp here. 3-bar micro channel, body's getting bigger, good for the bears, but still probably not reversing the entire bull breakout. Again, the breakout began, the range expansion began from the close of yesterday until the close of bar 1. How much of that breakout has been retraced? Really just coming back and testing the close of bar 1 on bar 7. So this 3-bar micro channel has not done enough to reverse the bull breakout. There's an argument to be made, of course. It's a trading range. You look to the left, bars, mostly sideways, swing down, swing up, maybe a big second leg trap, leg 1, pullback, leg 2, near yesterday's high, 3-bar micro channel, second leg down, likely, yes, but I said the bears have a scalp here, and remember, breakouts get second legs, and this breakout on the open, the gap up and follow through with bar 1 is likely to get a second leg. And it's probably going to get a second leg similar in size to the breakout. But before that happens, this reversal, it's a minor reversal, but it's strong enough for its own second leg. So the first attempt at trend resumption will probably fail. We'll probably find sellers above bar 7, maybe bar 6, get a small second leg sideways to down, and then maybe the bulls have a high 2 buy setup. The bears get their initial second leg, leg 1, pullback, leg 2, but now it's a 4-bar micro channel, probably sells above bar 8. And then bar 9, that's kind of more the second leg I was expecting to see. Leg 1, pullback, leg 2. Maybe there's some room to the downside for the bears to reach their leg 2 measured move, but in a bullish regime, bearish setups are going to fail more often. So I think it's buy below bar 9, still always in long. And now the risk with selling here is you're selling a second leg against a strong trend. There's your high 2, bar 10, a strong bull reversal bar. It's always in long. I don't think it ever flipped to always in short. I think always in short, or I think always in long, or let me back up. Always in is reserved for the trending direction, which side is controlling the major market movements. So the always in direction is long, and the bears never did enough through here to make it always in short. Although they possibly made it temporarily always in short. Like I said, this 3-bar micro channel will probably get a scalp. The bears can sell. They can sell a pullback. They can capture that second leg. But as soon as you see bar 9, it's really hard to justify being short because you have the strong bull breakout, 2 legs against it, testing support. You're probably going to find buyers in this area. So the bears have had their second leg, and now it might be time for the bulls to get their second leg. It's also possible that this is a tight enough bear channel that bar 10 does not resume the trend. We may have to go more sideways, but ultimately the bulls seem to still be in control, and it's still always in long. So if you're short for any reason, you have to exit above bar 10, and if you're flat, you can buy above bar 10. So possible trading range developing here, but still always in long. The bears, 1, 2, maybe 3 legs down, probably buyers below bar 11, below bar 10. Couple legs up for the bulls, but testing resistance. There might be sellers on bar 12, 2 legs up to the top of a trading range. But the increased risk with selling is that you're selling in a bull flag. This might be a bull channel, and we might have to test. We're probably going to get to a new high of the day. Expectation here, probably sellers at the new high. We are in the channel phase, so we had a spike, we had a pullback, now we're channeling, probably sellers at the new high. But this is a tight bull channel. It's actually technically a micro channel from bar 10 to bar 15. That's enough momentum for the next reversal is probably going to be minor, so bulls can buy, scale in, probably capture a second leg. The bears already have a completed structure here. Leg 1, pullback, leg 2. Now the bulls have a micro channel that needs a second leg, and the bears don't have much to sell, so it's always in short. Okay to buy 15, even though you're buying at the high of the day. Use a wide stop and scale in lower. 16, probably minor reversal, but reversal bar, possibly strong enough for a small second leg. Reversal follow through, 16, 17. That is strong enough for a second leg sideways to down. Here's a channel line, so the possible trend line could be here. You have several areas of support, both moving averages. This is the higher time frame, 60-minute chart, 20 bar exponential moving average plotted on the 5-minute. Then you've got the 5-minute 20 bar exponential moving average, yesterday's high, and then the possible bull trend line. But reversal follow through strong enough for at least a small second leg down. But the problem with selling here is you're selling in the buy zone of the bull channel. So immediately reverses. And then do you really want to sell for a second leg after seeing bar 18? Remember, you want to trade in the direction of the trend. So not ideal for selling. You know, the market's testing the bar 16 low, possible breakout point, breakout, pullback. Maybe the bears get a second leg, but this just is not the greatest context to be doing that. So now we have a new high target for the bulls. 1617 should get at least a small second leg, and if it fails to get a small second leg, you can look for a measured move up based on the height of this signal, and it looks like it's failing in a big way. So another target for the bulls is going to be up here. 3-bar micro channel occurring at leg 3, but in the direction of the trend. Leg count is really more important with trading ranges and minor reversals, minor breakouts. It is leg 3 in a channel, and you may get a correction here, but it's more important to avoid selling leg 3 here than it is to avoid buying leg 3 here, because big picture, it's bullish, and this is probably going to get a second leg up, but over here, leg 1, leg 2, leg 3, this is the last place you want to be selling. But buying here, the reality is that if you buy here and scale in, you're probably going to make money. But the price action is telling you you've got 3 legs, testing a channel line, you get a much smaller bar on bar 20, so the bulls are losing momentum. We may have a pullback here. Minor reversal. It's very much a minor reversal. Market going sideways, no bear breakout to sell. The bears who sold here are trapped. They may use any small pullback they can get to try to exit and avoid a loss. But right now, it looks like it's really difficult for the bears who sold 17 to avoid a loss. And that's why also buying here is probably not the worst mistake, even though it's leg 3 in a channel. The bears are trapped and there's not much selling pressure to convince me that the market's always in short and needs to go lower. Bull breakout 25, second leg up likely, minor reversal. Testing support, bar 30. Probably buyers. We can see there were buyers in that area on bar 30. It's kind of a smaller market cycle, breakout, pullback, channel. The channel evolved into a trading range. We're testing support in that range and finding buyers. A smaller time frame, there's a high too. Basically, it's a double bottom bull flag. So 30 probably okay to buy. It's still always in long. You can buy for any reason. You can buy above 31, bull bar closing on its high. Bull's getting another leg up. It is still the channel phase, so we're finding some profit taking at the new high and at the channel line. But still, minor reversal. Is bar 33 any reason to panic and to exit longs? I don't think so. I think you can hold at least part of your position, hold part of your position long here, because the bears haven't done anything there's no strong enough bear signal to break a significant bull trend line. Because of that, we can go a lot higher before we get that. Remember, there's measured move targets on the bull's radar. This is one of them. But also the initial breakout and follow through, I'm calling the gap up the breakout, and bar 1 the follow through. I wonder if those are in a similar place here and here. The main point, this is kind of classic small pullback trending behavior. Pullbacks lasting 1 to 3 bars. They're very shallow. Bears not gaining much traction. There's not much selling pressure along the way. So okay to be long. You can take any bull breakout signal and pretty much buy anywhere, and you're going to make money. So you don't want to be counting legs in contexts like this. You don't want to count with trend legs. Leg counting, like I said, is for trading ranges for minor reversals. In a major trend, you can count leg 6, 7, 8 probably at this point. What's really more important is counting the counter trend legs, like here, 1, 2, 3 attempts down on bar 11, then reversal. For the bulls, this is a tight bull channel. It's a breakout on a higher time frame. So if you buy and scale in lower, you're probably going to make money. What about bar 38? Decent bear breakout bar, but not especially big, and it's right on that tight bull channel trend line. So we'll see. Maybe they get another bar, but right now 38, nothing to be too worried about. It's a bear breakout. It might get a small second leg, but it's at support. The context supports higher prices. And then it quickly reversed back up. 3-bar micro channel, another breakout, likely to get a second leg. All reversals here are minor. So bear breakout, but lots of overlap. Probably buy the close, scale in lower, probably make money. That's a two-legged correction to the trend line on a smaller time frame. Bear breakout 44, even though it's a lot of overlap, it is a bear breakout. It's a trend bar. Pullback to the high of 45, and then a second leg down to the low of 46. So the bears actually made a scalp there. This is more high-frequency trading firms. And computer algorithms, they're programmed to detect momentum, enter in a certain way, capture second legs in a certain way. At least that's the way I imagine it. But yeah, even here, bar 44, it's probably not the greatest trade to take. It's a tight bull channel. Better to look to trade in the direction of the tight channel, but enough of a reversal that it gets a small second leg. The danger is that, for example, bar 38 never got that second leg. If you sold, you would have been trapped. But this one happened to get a second leg. And to be fair, I say this one happened to get a second leg, but what's happening here, this was more contained within the channel line, whereas bar 41, breaking above the channel line, increased chance that we correct for a couple of legs sideways to down and test the trend line. This way that I have the trend line drawn is just one way to have it drawn. In other ways like that, so it's possible. Some computers will say, hey, look, that trend line got tested on 46, and it's good to be always in long again, so buy above 46. Nested second leg down, bar 47, probably buyers below. High 2 at the bull trend line, 48, probably buyers above. Bar 49 is basically a third leg, so this is the importance of leg counting in a trend. Again, you don't want to count the legs in direction of the trend. You can count 1, 2, 3, 4, 5, 6, 7, maybe 8 legs. But you don't want to count the legs in the direction of the trend when it's a tight channel, small pullback trend, because it's a breakout on a higher time frame. So the breakout is basically just growing. But you do want to count the legs of the reversal attempts, and that's what we have here. As the market corrects sideways to down, we have a breakout, a pause, or there's, I guess, two ways to look at it. Breakout, pause, second leg, pullback, third leg, pullback, fourth leg, 49, or you could simply say 1, pullback, 2, pullback, 3. So bar 49 is a third leg for the bears on the bull trend line in a tight bull channel or in a small pullback bull trend. So really bad area to be selling, which means a really fantastic place to be buying. Bar 49, a buy the close bar. Where are we going? Probably to a new high, which we get on 52. And you can see prop taking on 53, but 53, again, minor reversal. Just like all the bear bars along the way here, Is 53 going to reverse this small pullback trend? Probably not. So maybe it gets a small second leg, but it's still always in long, buy below, scale in. You're probably going to make money. Reversal follow through may get a small second leg down, but the risk is that it's a second leg trap. 1, pullback. 2, testing support, testing this area that I said was a really bad area to sell. And if a trader did sell here, they got trapped 50, 51, 52. That creates support, probably buyers in this area, plus a trend line and the moving average. So 54, strong looking bear trend bar, reversal follow through signal, but bad context, might be better to buy here. You get the reversal. It's strong enough for a small second leg. There's an attempt at a second leg, but probably buyers below 55 or 56. Bears getting their second leg, testing support. Like I said here, the trend line, the moving average, and a bigger second leg. 1, pullback. 2, nested. 1, pullback. 2, 57. Probably a buy the closed bar. 3 bar micro channel, but doji bar at support in a bull trend, buy the close, buy below. Bull breakout, buy the close, buy a pullback, second leg up likely. Gets follow through, buy the close, buy below 60, second leg up likely. 61, first reversal, buy the close, second leg up likely. Gets a small follow through bar, but on a smaller time frame. This is leg 1, pullback, leg 2, testing support, breakout point 58 high. Buy the close, second leg up likely. 63, a deeper pullback. We might be in a tight trading range at this point. But still, if it is a tight trading range, what do? Buy low, sell high, scalp. 63 is still buy the close. You're at support in a bull trend. So 3 bar micro channel, but there's a pause, breakout, pause, second leg, at support, buy the close 63. 64, probably a profit taking bar. Bar in a tight trading range. It's attempting to break out above that, but the context is a small pullback bull trend. So in this context, it's probably okay to hold long and just exit below a bear bar, but 64 probably will attract some profit taking. Minor reversal, 65 indicating some profit taking, but not necessarily a major reversal. 66, bear breakout, but testing near support, probably buyers below 66. The channel continuing. Bulls buying pullbacks, taking profits at new highs, so sellers above 68. But 68, not a good low too. It's a minor reversal. Probably buyers scaling in lower. Bull getting a breakout of a bull channel line. This is becoming parabolic, which is unsustainable. So it's probably good to take profits here. In this area, you have the fact that you're getting late in the day. It's past bar 70. It's been a bull trend day. Sometimes in the final hour, you get a sell-off due to profit taking. Traders buying all the way up eventually take profits, and especially if it becomes parabolic, unsustainable like this, you get a breakout of a bull channel line. That's going to attract some profit taking. So this might get a burst of momentum, but it's probably unsustainable. 72, that's the default exit bar. You have a breakout attempt of a channel line, and then you have a bear bar closing on its low. It's late in the day, probably reasonable to exit longs below 72. Minor reversal, maybe the bulls get another leg up. Different ways to draw the channel. 75, also kind of similar to here, thinking it's a breakout of a bull channel line. It's the biggest bull trend bar, maybe in the entire bull trend since bar 20. So it's occurring late in the trend, late in the day, and breaking a channel line. 75, likely to attract profit taking. So probably a sell to close bar to take profits, although it's aggressive to sell to close to go short. Smaller follow through bar, not ideal for the bulls, still good profit taking territory. Another big bull climactic bar 77, even bigger than 75, another profit taking bar. I would not be eager to buy here. It's kind of like what we talked about on the daily chart, where the bears are not eager to sell. I don't think the bulls are eager to buy here. Big bars, big risk, 1R, target all the way up here. Breaking above the bull channel line, more likely the breakout fails and converts into a trading range rather than an even stronger bull trend. But again, late in the day, huge bar, good to take profits on the close of 77, but aggressive to sell it. 78 bear breakout, strong reversal of 77, too late in the day to do anything but second leg down likely. And we just ran out of time. All right, that's going to be it for today's video. Thanks again for watching. And just a reminder that you can find a lot of resources in the description of my channel. If you have not studied the Brooks trading course and you want to go deeper into price action, you can find a link to the video course in the description of my videos, and that helps to support my channel and will definitely help your price action reading and trading abilities. I've also got the channel membership there where I post exclusive videos with topics like level 2 study, trade reviews, stuff like that for, with ad-free videos. And then there's a couple links for Ali's website, Ali's breakouts white paper. And then, of course, the You Were Born Rich seminar from Bob Proctor, which I think ties everything together. I think, speaking for myself alone, studying the Brooks trading course, doing Systems Academy, studying Ali's, pro trader mentoring, library videos, and the breakouts white paper, all the resources are available, but I wasn't able to put it all together without the seminar. So I highly recommend watching the seminar that I put a link to in the description of my videos. So again, I hope it's all helpful. Thanks again for sticking around to the end of the video. I really hope these videos and the advice helps you get closer to reaching your goals. And I hope everyone has a great weekend.